Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Friday, the 12th of February. Starting off with Cent Resources, and it looks as though we're in a triangle wedge formation. 0.94 pence the buy trigger on an end of day close basis. That would hopefully take the shares up to fill the gap towards 1.5 pence over the following 2 to 4 weeks. Decent RSI rebound here as well from extreme oversold levels, so a chance of salvation for long-suffering shareholders there. Cent Mining rather more developed in terms of the recovery. We had the end-of-day close back above the 100-day moving average earlier in the week at 3.38 pence and soared ever since, which is what you would expect to happen in such conditions. The view now is that we could head as high as 7 pence, which would be this resistance line projection at the top of this triangle from March last year. Any dips back towards 4 pence regarded as a buying opportunity given the overbought RSI, but this looks like it's got some power and momentum behind it. Next up, Conroy Gold, and the Condor Gold rather, with the bounce off the 20-day moving average at 33 pence. End of day close above the 10-day average of 39.1 pence should be enough to offer us a retest, a partial or even full retest of the best levels of last month towards 70 pence. Initial target is the 200-day line at 46.88 pence, and if you're cautious, maybe you wait for an end-of-day close above that before regarding this as a bona fide bull situation, but really back above the 10-day line should be enough to get the shares of Condor Gold back up again. Mercom Oil Sands is next, and here you can see that we've had a decent end-of-day close above the 200-day moving average. First got attention for this when it broke above the 50-day line at 2.06 pence. Up to 5 pence is the target at the top of the 1-year range over the next 2 to 4 weeks, and we wouldn't expect any breakback below the initial February resistance at 2.82 pence in the interim. Possibly a dip on the basis that the RSI at 89 is very, very overbought, but that 2.82 zone should come in as support. Next up, a stock which has been bubbling up for quite some time, PCG Entertainment. A bit of a slow process, a few false starts on the 50-day moving average, but it looks as though on this occasion with the RSI above neutral 50 in quite a decent way, it's at 58. The shares should go up and stay up, so to speak. Potential target here as high as 3 pence, which would be the top of a triangle that I've drawing from October, and the stop loss zone right just below the 0.8 pence area should suffice over the next few days. Initial target obviously 1.5 pence, but obviously this is a rather illiquid situation, so there could be a bit of spiking around in the meantime. Finishing off with an old favourite, especially if you believe that there's lots of hydrocarbons under Horse Hill. Situation now, we're just about holding this rising trend channel from last year. Maybe you could draw it a little bit lower towards 1.2 pence as the base, but basically above 1.2 pence, still a chance of 1.8 pence or 2 pence over the near term. Maybe a move which is similar to the move we saw in November. If you're cautious on the shares, maybe wait for clearance of the 10-day moving average at 1.34 pence before going along. That's it from me. More updates at the same time tomorrow.